Welcome inside the FingerLakes1.com studios. I'm Jim Sinacropi. Over the past few weeks, the regional banking system has experienced some significant upheavals with the failure of several prominent banks, including Silicon Valley Bank. This has understandably raised concerns about the health of the broader banking system, the safety of depositor accounts here locally in the Finger Lakes, as well as the stability of local community banks. To shed some light on these issues, we're joined today by Menzo, President and CEO of Generations Bank, a community bank with a strong reputation for stability and service. Menzo, thank you for joining us here today to help us understand kind of what's going on here in the financial world.
Well, it's good to be here, Jim. A lot going on.
Yeah, it's got a lot of people on edge, and understandably so. But can you explain exactly what has transpired over the past couple of weeks that's led to the widespread concern about the stability of our banking system, financial institutions?
Right. Well, the collapse of Silicon Valley was certainly a shock to everybody. Just a few weeks before that, they were touted as a very investable bank. Buy the stock, do all this. But looking at the information, and I've got some notes here, they're a $210 billion bank. They doubled in their size in 3 years. At the same time, the capital level was below the well-capitalized level for community banks for banks. So it's below 8%. By contrast, here in the
So that's basically their cash on hand.
Well, it's the assets minus liabilities,
Right.
net worth.
Okay.
So that is expressed as a percentage of assets.
Okay.
To be well-capitalized, you need 8%. So in contrast, here in the Finger Lakes region, all of our banks are about 10%. And we don't have that type of growth. We haven't seen too many banks triple or double in size in a couple of years, 3 years. And if we had, I think the regulators would have been down our throats because it's just not normal, and it better be in your business plan if you do it. 90% of Silicon Valley Bank's deposits were uninsured, and almost all of them were with high-tech companies, high technology, and financed by their startups.
So uninsured meaning they were over the $250,000 FDIC limit?
Right,
Okay.
and there were millions and millions of dollars.
Yeah.
They weren't just a couple $100,000 over the limit, but there were millions of dollars. Most of those deposits were held in money market accounts, 75% or plus or more. So this is money that's going to go in and out, and they should have expected that because that's what they're designed to do, supposedly. This bank was set up to handle startups. Most of the securities were long-term and held to maturity. So that means they can't sell them without having some problems.
Mm-hmm.
The unrealized loss on those securities was greater than their equity, greater than their net worth. By contrast, as we look at our banks, we don't see anything like that in the Finger Lakes region. It's a totally different set of circumstances. We're just totally different.
And so we spoke earlier, too, that the situation that developed at Silicon Valley Bank, even though they were so much bigger in size than most of our community banks here in upstate New York, is that you're under more scrutiny than they were.
I believe that we are. I can speak from experience. We have our regulators in often. We communicate with them at least quarterly. And talking with most of the banks in this region, that's what we do. We talk to our regulators. We get briefed by our regulators at least twice a year. We have our CEOs talking with our regulators as a group and just getting a feel for what's the concerns, what's happening. And they provide us with statistics quarterly of all the banks, just so that we know where the norm is.
Mm-hmm.
And then if we're outside the norm, I can tell you from experience, they'll be at your door just talking to you about, well, what's your plan? Do you plan to come back into the norm? What are you trying to do? What are you trying to accomplish? Explain your strategy.
If they don't like what they hear, then what are the consequences?
They'll help you adjust that strategy.
Right.
Yeah. So
Okay.
we recently read about one bank that had an adjustment, and their whole senior team was pretty much put under hack.
Mm-hmm.
They were written up, and in no uncertain terms, they had to correct the situation. So from this standpoint, this bank, Silicon, again, going back to them, they had no risk management officer. They had no risk management board committee. They were just floating along, and they were buying long, funding very short, but the securities they were in, they couldn't even sell. They were held to maturity.
So I mean, it sounds like an extraordinary set of circumstances, but we saw First Republic banks fail, and then over in Europe there were some issues. How isolated of a situation was it to Silicon Valley as compared to other banks globally that are the same size as the Silicon Valley?
Right. Well, these large institutions really need the Dodd-Frank Act, which I'm not a big fan of, written by one of the directors of Silicon Valley Bank, which
Ironically.
is interesting. Ironically. They're not subject to some of the more stringent requirements that are put on the biggest banks like Bank of America, Wells Fargo. And looking back, they really should be. But unfortunately, what happens with regulation, if these $200 billion banks are subject to these new rules, somehow it gets pushed down to banks in the billion, under $1 billion, and then even down to our level. We're in less than $500 million. But then we're required to keep up standards that make no sense given our size. And this is true for the Finger Lakes region. Our deposit base is different. Our loan base is different. We're conservative. And our banks have been here since the mid-1800s across the region.
Yeah, so through a Great Depression, through the
Through
2008
everything.
financial crisis, all that stuff.
And our boards, most of them are senior grade managers. They've been part of this. They've been part of the community. And they've built their homes here. They've built their lives here. And our management teams are from the area. So it's a culture of that's very conservative. And we're interested in our communities. We invest in our communities. I can't help but think of It's a Wonderful Life.
Sure.
And the bank run, Jimmy Stewart's famous line, you're thinking about this place all wrong. The money's not in a safe. It's invested in Joe's house and the guy next door. That's the way it is with most of our institutions. We have plenty of liquidity, but most of the money is invested in our local communities. And we've invested such that the cash flow comes back to us, and we reinvest it, and it comes back to us, we reinvest it, and so on.
Can you imagine at Silicon Bank, you're getting this all wrong. Your money's in this guy's startup, and then it was
Right.
loaned from there to this fund. And so a little less transparent or even
Well, they're across the
something.
country.
Yeah.
I don't think there's 5 of us that have investments across the country at that level. So we're heavily invested in our communities right here where we know it.
So I think one of the things that's frustrated for the average working class family here in the Finger Lakes, or really anybody working towards retirement or trying to buy a house, is all this news breaks about Silicon Valley Bank, and all of a sudden there's a financial crisis, and everybody, I think, is just like, what does this have to do with me? Like, we didn't do anything wrong, and now we have all this hardship or potential worry. So just to, I guess, set everyone's mind at ease, how safe are everyone's deposits at a bank like Generations or some of your other, banks of your size in the region?
Right.
Are the money safe?
Oh, absolutely. There's no way that we're going to see the kind of disaster that we've seen in Silicon Valley here in the Finger Lakes. I know many of the bank presidents, many of the management teams personally, from all these banks. We have conversations regularly. As a matter of fact, I'm going to meet with a group of them next week, and I'm going to hear the same thing that you're going to hear right now. We don't have any kind of exposure like this. Now, we have depositors that are above the $250,000 FDIC limit. But these depositors, many are businesses. And they're not going to move their money to 3 different banks just so they're under the FDIC limit,
Right.
because now they've got control issues. It's just a miserable mess to try to pay this bill from this one, but not from this one. Transfer this, do this.
Yeah.
So
And
it
some
becomes-
with this big enough payrolls where
Right.
that's not enough to have in your account to cover, a
Right.
payroll throughout a month.
Plus the float and everything else.
Yeah.
So, as a normal course of business, we see a lot of our customers throughout all the banks that are above the FDIC limit, but we do business with these folks. We know their kids. We know we know their children, and there's an inherent trust in our banks, and we're all well capitalized. We're all above the 10%, which is more than the 8% required, and we've been managed the same way for 150 years, with the eye on the long term, the eye on doing the best we can for our communities. It's just a different culture. So I am absolutely confident that our banks aren't going to lose a nickel. The other thing to keep in mind, our Treasury Secretary made some ill-advised comments and saying that we're not going to insure all depositors. We're just, whatever happens, happens. You made your bed, you lie in it.
Yeah.
Well, these small businesses, these small families that have saved up money, that's the wrong message. It's the exact wrong thing to say. Now, fortunately, we've seen a retrace of those comments, and the FDIC has come out, and the Fed. We're going to make sure our system is safe, and we're going to implement whatever it takes to make the system, to grow confidence in it again. So, unfortunately for us and all the Finger Lakes region, we're going to pay through the nose for that through increased FDIC premiums, and we aren't part of the problem. But
Yeah.
we have to be part of the solution, because confidence in the U.S. banking system cannot falter.
And so that's one of the-
imagine if you lost $1 from a deposit. Just
Right.
if you lost your money over $250, what would you do? You'd call your neighbor, take the money out. You'd call that neighbor, take the money out. And in our world, your neighbor might be in California, might be in Texas.
Sure.
And next thing you know, you get run on all these small banks. And I'll tell you, the answer is not to go to the super regionals. That's not the answer for most small businesses as they do their business with us. Consumers, they do their business with us. So we're going to see complete protection for our depositors. And we have it in ourselves. Liquidity is strong at all our institutions here. And as I said, I'm confident. I'm not worried about it. I'd open an account, even one of my competitors, because I have that much confidence in them. I'm not worried about it at all.
So when this first was, really happened late on in the week, a couple weeks ago, and then the weekend, there was a lot of uncertainty. On that Monday morning, did you have a lot of customers inquiring and concerned and wanting to withdraw and go to cash, or what was that like?
Monday was a non-event. As I have heard from other institutions, honestly, if we had 5 inquiries, that was a lot. I had one for sure that we dealt with and talked to, and we were able to help them through labeling their accounts properly so that they get the most out of FDIC.
Okay.
It's all about titling, and they were well over the 250, and as a result of just changing the titling, they were 100% secure behind FDIC.
But what you are saying is essentially, despite that limit, there's no way the federal government would ever let depositors lose money.
Okay, just think about it. How fast would our banking system collapse?
Well, our society.
And our society in general, but any bank, take our bank. So our bank, for some reason, loses all its liquidity, and depositors come to us and we say, listen, we can't give you the cash. How long would it take for that contagion to spread to every institution in this region, and money just started being drained from these accounts? It's not a good idea.
Right.
So I don't see it happening practically. Now, financially, I don't see it happening now. By and large, the number of unsecured or uninsured deposits above the $250,000 limit, the percentage has increased to 59% since 2012, or I might have it backwards. It might have went down to 55%. But let's say it dropped from 59% in 2015 down to 55%.
And the number of total accounts that have over that limit? Is that what you're saying?
These are the insured. So that means there's 45% uninsured deposits
Okay.
in the banking system. Now, we don't have anywhere near that number.
Yeah.
But I wouldn't be concerned as long as it's well below the 50%, because once I get to 50% uninsured, I'd start to be concerned as an institution, and I don't think I would take it. I think I would put it in a reciprocal deposit. So we're able to contact another bank say, will you take the excess over 250 and then give us back another deposit, and that way our customer's insured?
It's like load balancing.
Absolutely.
Yeah, okay.
So we would do that. So we're well below the 50%. We're below 30%. We're below 20% uninsured because it's not the type of banking that we do. We're consumer-driven. Now, there's other institutions in our area that might be a little bit higher, but again, they're more business-centric, and I can fully expect them to have a lot more in uninsured, but these are business accounts, and I don't see a practical way of breaking that down, and they shouldn't have to. If I'm doing my loan business with, let's say it's Lions National, I want to keep my deposits there so that we can have a very strong relationship. I might get a better yield on my loan, and I can understand that. And it's the same is true for our customers. But we're not a business bank. We're not quite like that. So I can see the commercial banks having much more exposure to that, but it's completely managed, and they've done this forever. These folks have done this for a long time. I have a lot of respect for these institutions around, and it's a non-event, it's a non-starter, just because the FDIC no one will lose a dollar in the banking system. They're just not going to allow it.
So one thing I wanted to clear up too, because it was a question I kind of had, because watching any news coverage over the past couple of weeks involving the situation, they're always talking about the health of our regional banking system. Now, Generations Bank and other banks in the area are not part of the regional banking system, right? It's more community oriented. So when they talk about regional banking system, they're talking about another layer of bank that really, to say regional maybe isn't correct, because they're more of a national and even global in scale.
Well, we'll take Silicon. They were a national bank in scale. They had tech companies from across the country.
Yeah.
They're trying to coin a word, regional, to make it meaningful.
Right.
But meaningful is the regional bank here is a combination of about 40 of us.
Yeah, right.
So we're so diverse and spread out. Watertown Savings, they're into themselves up there. I don't know what size they are, $500 million, $1 billion, but they're a micro bank. Now, if they're a micro bank, we're under 500,000. What are we? We're an itty-bitty bank. But when you start combining, you take Fulton Savings, Watertown Savings, you take Lions National, Canandaigua National, you start to combine them all together, that's the regional banks.
Right.
That's the region, and there's no one bank that does it.
Right.
So when we start talking about these $200 billion banks, or even a $100 billion bank, these are systemically important banks, as we found out. If a depositor is going to lose money, it's not going to happen. And in our area, it's such a non-event. It just can't happen.
So would the whole financial system be better served if the entire landscape of banking across the country was community banks as opposed to these big players? Or do the big players, whether it be a regional size bank or a behemoth like JP Morgan, do all these different size banks play a role in the financial economy? Or would really we be better served if every community just had their own bank?
Well, I'm a huge fan of community banks.
Right.
And I don't use the term for these multi-billion, not even more than that. Anything above $15, $20 billion, they can claim they're a community bank. I'd hate to have to call them.
Right.
Yeah, it's just not going to happen. You're never going to get through the phone tree. I'm a big fan of the smaller banks, smaller institutions, because they know what's going on. And when there's a problem, we're right here with you going through that problem. And we're able to do it because we know the area. I think that there's a place, though, for these large behemoths, absolutely. And I'll take you back to 1906. We talked about this at lunch. 1906, there was a panic, and J.P. Morgan personally got all the bank presidents together and took them to his house and literally locked them in his library till they came up with a solution to overcome the obstacles that they had. And it was a lot of finance, a lot of funding to put confidence back into the market.
Is that similar to what happened this week where a bunch of large banks got
There you
together
go.
and contributed?
That's right.
Yeah.
So we want to see, especially these trillion-dollar banks, which are just behemoths.
Yeah.
They're a government unto themselves. They got together, and they bailed out First Republic. And that's their business, and frankly, they should have. And I'm glad that they did. You know, when the towers collapsed in 9/11, we all watched in awe and just, what do you do? Well, one of the big secrets about that is one of the buildings that was lost was the Federal Home Loan Bank of New York. And it was right there in World Trade Center, right next to it, and that building was lost. Well, that happened to be our correspondent bank. So we have check clearing and everything else, and we were out of money on paper. So we contacted another bank, and they fronted us the money for 3 days until the FHLB could get reestablished and we could get our connections back together, and it was no big deal. So this is why it's important. These small banks and these large banks, they do have a place, and frankly, the camaraderie amongst us, we are absolutely competitors, but at the same time, I don't think in the Finger Lakes, I think if we really had a problem and we had to talk about liquidity, I believe the other banks, including us, we would band together and we would figure out a solution, just like they did with this First Republic, but at a grander scale.
Yeah, well, that's comforting to know. And yeah, I think maybe a lot of people don't look at banks in that way, you know, like the camaraderie between banks, but everything is so kind of intertwined, and what's good for one is good for everyone, I think, when you're talking about that.
When it comes down to depositors,
yeah.
we cannot allow a depositor to lose a single dollar. So whatever it takes, we're all going to stand guard over this. And as I said, we're going to end up paying for that, the banks, with a special FDIC assessment to cover the losses from Silicon, Signature, and whatever that other one, Clearwater, or whatever they were called, the one that was the crypto bank. And there may be others. I don't think there's going to be a lot of others. I think there are some controls now in place. We've seen the Fed open up the discount window and open a new facility, and that's been well received. The Federal Home Loan Bank, they've been a source of liquidity, high cost, but nonetheless, it's there. So I don't think you're going to see it. Everything's starting to calm down across the country.
So just shifting gears a little bit, with inflation and this situation that we've just been discussing, I think a lot of folks are worried or concerned or not knowing exactly how to achieve their financial goals, whether it's to buy the first house or retirement age. So without, you're not here to give financial advice to individuals, but let's just say that you're at or near retirement age right now. What should those folks be thinking about in terms of their savings and their 401k? If you were to give them advice.
Well, one thing I tell employees, I'd certainly tell my children. So I'll start with my children. First off, have a plan, and make sure that you're living within your means. Have a running budget. If you haven't established a budget that's written, I strongly recommend it. Now you can see where the money's going.
Mm-hmm.
Then as you build a budget now, where do we need to be in the future? Well, we need to cover 70% of our income that we'll have at retirement. So how do you do it? The only way that you can do it today is to invest and put it in a 401k, maximize the matching that your employer provides, and then invest it with the advice of someone that's done this for a while.
Right, and then not worry when the S&P 500 goes down 2 or 3% in a week or a day. These are long term. You're just betting on the fact, or not even betting. It's been pretty reliably proven that over a period of time, especially if you're a young person in their 30s right now that has a 30-year window till their retirement.
Right.
It's
So
a safe.
getting advice from an investment advisor is the best way to go. There are many choices, but this is where the small banks, the smaller banks come in, because they have these connections. If they don't have the service directly, they have the service. They know who provides the service, and these are trusted individuals, most times from families that have been established in our community for years, and they've just gone on to build careers in investment advice, and they do a really good job of it. I know that you use one that's a local name.
Yep.
I use one with a local name. And there's so many, and you have to get that advice. To go out to the market and then pick a stock, you're going to fail most times. Now, there's a couple that have gotten lucky, but
GameStop?
GameStop. But in the end, it's get the advice of an investment professional, pay a little bit, and in the long run, they're going to take care of your needs. They're going to address your risk. And by the way, the controls that have been built in that industry over the last few years have been extraordinary, so that they have to ask you certain questions and ask about your risk tolerance. And they have to explain it a little bit more. And I think that's a good thing for the industry. So, plod. You don't need to run.
Not a sprint,
Plod.
it's a marathon.
Right, it's a marathon. Now, those that are near retirement, hopefully you've had this plan. If you don't, be careful what you get into, because you don't want to get in something long-term. You want to get into the short-term things.
So is it like a bad time? Let's say you're planning on retiring at the end of this year, and then you look at things and like, maybe I should wait a couple more years. Is it?
Well, that's a tough one. With inflation the way it is, I'm finding more and more going beyond age 65, and frankly, I've seen a lot of 65-plus-year-old going back to work.
Don't tell them that in France.
Right, they go crazy, 62.
Right.
Each circumstance is different. You can never go wrong by paying down debt. You can never go wrong by putting money aside for both emergencies and for retirement. So it's never too late to do that. But one of the things we have to learn to do as a nation is live within our means. And sometimes you have a payday that's fantastic. Put a little aside and try to stay where you're at, and don't trust in an uncertain riches, an uncertain stream. Let it ride out a little bit. Let's see what happens. And if you have to contract. Get back to the basics. I've seen it done with a lot of people, and especially now. Rates are going up, salaries are going up, but they're not keeping pace.
Yeah, that's a frustrating thing to me, is that, you see wondering if the Fed's going to raise interest rates or pause their increases, and it seems like one of the indicators that the Fed looks at is unemployment rate. They want unemployment rate to go up,
Right.
so there's less demand, or wages not to go up before they would start decreasing interest rates. And this just seems counterintuitive to you want an economy where people are working and wages are increasing. So that's why I think a lot of people, including myself, get frustrated at what the goals are, where it just is so much more, I guess, complex than it used to be in the old days, where you could just get a job and save a little bit and live a good life and raise a family. Yeah. Now it just always seems like there's something else out there that you should be doing, that your neighbors might be doing, and just confusing and frustrating, I think, a lot of people.
Right. I think it's a time to rethink our goals and objectives as individuals. One of the things that I think made a huge difference in the past is giving to your community and being a part of your community, and we've kind of lost that.
Not necessarily financial giving, but also time.
And just being in the community. And we're seeing a resurgence of that. There's an identity that's developed within a community. And hopefully we'll see that redeveloped, a small town identity, where the people on the street, you want to be around them, you're helping them out. It seems
vital to me, because it's easy, I think, to say, if you look at the political landscape right now, to say, I hate this group of people with this political ideology. and I hate that one, and they hate each other. But when you get right down to it, every community has people from both sides of the aisle, and they don't hate each other. When they're in person, when they're living in the same community and they're going to the same Little League game, or they're helping shovel their neighbor's driveway during a snowstorm, things like that, I just don't see it. But when you pull back and all of a sudden the political enemy is not someone you can touch or feel, it's easy to. So I think that lends to the community aspect as well, how important it is for our local communities to really take pride in our shared home.
Right, and being a part of each other's lives. And that's what our banks are all about in this region. Generations has been here, and we're part of the community. We serve on the boards that are important to our community. We're engaged in the service organizations, and we see this across all our Finger Lakes banks. And that's the difference.
Mm-hmm.
A Silicon Valley Bank has no comparison. They're not part of their community. They're part of a new community that they created, and they bragged about being a bank for startups.
Right.
But they didn't manage it that way, and they certainly weren't regulated that way. And as a result, we see them going down just in a few short years. Whereas our banks, here we are, we're going to go through it. The Fed raising rates the way they are, we're all getting squeezed. We're going to show less earnings. Maybe there's a few losses, but it's going to be fine because we're plotters, and we'll just get through it, and everything's fine that I see in the Finger Lakes region. We're doing just fine. Everything's going to be all right.
Well, that's a positive note to end our conversation on, I think. So thanks a lot for spending the time. I think it will be valuable for a lot of people who have questions about everything that's going on and about their own money and the state of the local banking system, all that stuff. I think it was really interesting. I appreciate you spending the time with us.
Man, it's great to be here, Jim. Thanks so much.
So that was Menzo case, and great information. And again, it's comforting to know. I mean, I think the community aspect of these smaller banks and the reliability and stability that's in place. So hopefully you can all sleep a little easier tonight. So for FingerLakes1.com, I'm Jim Sinacropi. Enjoy the rest of your day.